All right, we're back for another day of NQ and ES market analysis. That's a good start. Um, Today is a bit of an interesting one here because what you'll see is that we've been in more or less a range since the Monday afternoon up until today on Thursday. We've now come underneath this Tuesday low, but we are still inside of a big buy side imbalance on the left hand side that was created by this huge candle. And so, for a couple of reasons, I am kind of a little bit stuck between a rock and a hard place on what I'd be looking to do today. We've quite clearly got some bearish momentum. And despite coming underneath the bottom of this range of consolidation, we have had a candle closure straight through that swing point. Whereas when I know this is an SMT, so none of these candles actually took this high, but on ES, which you'll see in a second, when we took the top of the range, we were having swing failure patterns, which was indicating that it was a liquidity raid and we were looking to go lower. But because we have so far we had a strong candle closure on the 7 a.m. candle, we've got the 8 a.m. candle going right now. I am not 100% convinced that we are going to actually move higher right now. However, I would only be looking for a long, and I'm going to tell you why. Because when we have been having this consolidation and we are still inside of this buy side imbalance, I feel that the safest play whenever you're ranging is to be taking liquidity raids off the external points of a range. I think trying to take swing failures off or liquidity raids off internal liquidity points, I think is a little bit riskier. That's just a personal preference for me in terms of what I'm confident doing. I also think that when we've come down nearly 1.2% already today and we are miles away from the midnight open, I think the risk versus reward of looking for shorts is a little bit off just for me. Maybe if we had some really big manipulation higher, I might change my mind, but then I'd be looking at it as a bullish swing failure at that point. So for me, I feel like it's one of them things where maybe the bears is the way to go, but I think just because of where we are, I think I'd rather just sit out than try and look for a short when I feel like the meat of the move has already ran. And then looking back on the bullish perspective, I think that yes, we've taken this low and we have got another London low swing failure potentially because we could get still a bullish candle closure back within the range, which would indicate a swing failure. I don't love it just because the immediate price action is bearish, and I would have liked to have seen, for me to think, yeah, we're long. I would like to have seen from once we've taken this low, we just get a big sharp rejection of it, but we just haven't had that yet. So I don't have a strong conviction in looking for longs, but I just wouldn't look for shorts because on a personal preference type thing, I feel like the move has been run and I don't like trading towards internal liquidity when price action is quite consolidative like this. For yesterday, for example, I picked a short out of this over here. We had a bearish swing failure pattern from the top of the range. I mean, I know I say the top. I know we did have this, but in terms of kind of if you're looking at the box like this, at the time that swing failure pattern was happening from the top of the range, and we had clear rejection from these wicks that we were going to go lower. And then what happened is I got into a short move and we ended up going lower. But from here on ES, we've actually still got an SMT right now at this low, which is a bullish confluence. But I'd want to see, and maybe S&P 500 is the one I'd be taking the trade on like it was yesterday. But I'd want to see, once we take this low, I want to see a wick. I want to see a strong bullish displacement. And if we get that, I would be looking at longs. Maybe I'd size down because market conditions I just don't love right now. Like if you look at the candles and how the price action, even on the 5 minute, it's just not always been amazing this last week or two. So maybe I'd size down, but maybe longs it'd be something I'd look at as we're trading at the edge of the range rather than trying to pick a short out of these runs from these highs there. That's just a personal preference. I'd feel more confident taking a position from the end of a range than internally. So that's purely it. So I might get into longs, but honestly, I've got no need to trade today. I think whenever I'm in these situations where I'm not 100% sure about something, I'd rather just sit out, protect my capital, and then live to fight another day than try and get involved in market structure I don't necessarily understand. So that's kind of my thinking for today. I'm happy to sit out of the markets today, but we'll see. We'll see what happens when the market opens and if anything does arise.